If you guys watched my previous Tesla stock price prediction video, you guys witnessed that I predicted that in Q2 net income would be $2.372 billion, which would be an EPS of $2.28. Well, what we actually got in Q2 earnings was $2.25 billion and an EPS of $2.27. Sheesh! I was off by literally a cent. Like, that's absolutely crazy. Personally, guys, I thought that Tesla would miss earnings this Q2. I think all of us did, because there was a lot of FUD. There was a lot of FUD in the market that Tesla's gonna miss earnings. But oh my goodness, they smashed Q2. I'm surprised, and this is why I'm all in into Tesla, man. I mean, absolutely phenomenal. This shows you how strong Tesla is. And even with a factory, their strongest factory in Shanghai that was down for a month, capacity was 0, they still pulled through, blowing the entire estimates, blowing all the haters and them bears. So yeah, suck it. But what does this mean for the stock price? Are we going to the moon or are we going down? Because, you know, we're in a very volatile market and Tesla is one volatile stock. So what's gonna happen? In this video, I hope to answer that. We're gonna look at to see what the stock price could be in Q2, in between Q2 to Q3, and then we're gonna also predict Q3 and Q4, pretty much the entire of 2022. So without further ado, man, let's cut to the chase. All I ask to return is a like and subscribe. That's it. All right. Let's go, man. By the way, if you guys want to support this channel even more, well, now you can. You guys can now join a membership on this channel as little as $2 a month. You guys will get loyalty badges, cool emojis that I personally made, and a cool little members only community post. So that's pretty cool. I think we can get a cool community post going on. But again, this is only if you guys want to. You guys watching this video is supporting me well enough, but that's only if you guys want to. If you do, I appreciate you, man. I love you. If you don't, you watching my videos support me enough. All right, let's get down to the video. So if you guys have been watching me for some time, you guys already know this chart. You guys are pretty darn familiar with this chart. And for those of you guys that don't know this chart or a new viewer, it's a very simple chart, but I'm gonna tell you guys a few tweaks here and there so you guys understand what's going on. We have vehicles delivered, we have FSD price in the one time. We don't have enough data for how much or how many customers are paying monthly, so I kept it simple and put it as a one-time fee, but at a 15% rate, meaning that 15% of those who get vehicles will get FSD. It's way more than that, I know, but until new data comes in, this is what we have to work with. We got the FSD sales price, we got the FSD profit margin, which is around 44%, and this will continue to 64% by end of 2031, so that's pretty impressive. We have average vehicle sales in the thousands, total vehicle revenue, Q1, Q2 revenue, and then we have the last 3 quarters revenue and the profit, which then leads to the total revenue of the last 4 quarters and the last 4 quarters of net income. The reason why it's structured like this is to justify the PE. The PE obviously takes in the whole entire fiscal year or 4 quarters in a row. Obviously, if you take, for example, 86 PE for Q1 of 2022 will give you a whole different stock price if you don't take in the other 3 quarters, which gives you a full fiscal year. So that's how we do the PE. We have the shares outstanding here, the EPS, and the PE. Everything here is up to date and exactly what has been given to us from the Q2 earnings. So let's go ahead and see what the stock price could be in Q2 or post Q2. So for Q2, let's take in the price in right now. Right now, the stock price is around 740, 730, 750, around that range. If this continues, this will give us a PE of 80. So putting the PE of 80 will give us a Tesla stock price of $734 at a market cap over $760 billion. Now, we may have a negative GDP report coming next week. And if that happens, I'm expecting the stock market to tank a bit. I may suspect, and we may suspect Tesla may drop. Even though with these phenomenal numbers, with these amazing Q2 numbers, it may drop. I'm suspecting the PE could drop to 75, maybe if it gets worse, as low as 70. Stock price can go to 642. It's hard to see the stock price go below 600 now with this strong Q2. It really is hard to see it. In order for it to go in the 500s, the PE needs to be in the 60s. And I really don't see that happening unless some bad stuff happens. And I'm talking about something worse than the negative GDP reports. But all in all, putting it at a PE of 80, I think that's fair because Q2 was absolutely, they smashed Q2, man, absolutely phenomenal. So trading in the mid 700s or low 700s or even high 600s is a possibility from now, July 21st, to probably October 20th. But I don't think this will age well because we have a stock split coming up in August and we have a lot of good news coming and a lot of surprising news coming for Tesla next month, so, and the months after that. So it's going to be an interesting quarter. But I suspect an average of $734 per share from now till October. Now, what's going to happen in Q3? Am I going to be close again, or am I going to nail it this time, or am I going to miss? I honestly don't know, but we're going to try our best to see what we can get. I suspect in Q3 it's going to be a monster. It's going to be an absolute monster year in a quarter in terms of deliveries. I think they could potentially do 390,000 vehicles. We'll do an exact estimate closer to Q3 deliveries once we have more data what's going on with the Shanghai and other gigafactories. Will have more data and more clues on how to predict it in a very strong way. The last time I predicted, I was off by maybe around 8,000 vehicles. Less. I think next time we can do a much better job. But for now, I'm going to say 390,000. Now, before we get into it, what I want to point out here in Q3, I put the average vehicle sales at $57,000. Why I put at $57,000 is because I still believe there's still going to be a inflation problem, sky high demand, and supply chain issues. I still think in Q3, for most of Q3, we will still see this. But the main reason why I stood at this number was because in Q2, when I did the math, the average vehicle sales was $57,330, putting it at $57,000 in Q3. We get about almost $23 billion in revenue and $4.4 billion in net income. Now, I want to make one thing clear. In Q1, net income from the revenue was almost 18%. I think it was 17.7%. For Q2, it was 13.5%, I believe. So in Q3, I kept it the same as Q1. I rounded up to 18%. Whatever the revenue is, 18% of it is net income. And for that, that's the number that we get. Now, I'm suspecting that Q3, since it's going to be a very monstrous quarter, we could see a lot of hype going back in and we can probably see FOMO rushing back into Tesla. That is if the macro environments are a whole lot better. If they're not better, well, I don't think we can see this number, this PE, but we'll look at that as well. I think a PE of 80, keeping it at 80 is generally safe because of all the FOMO and everyone rushing back to the stock. Or not rushing, but people, more institutions, more Wall Street people, they'll start to see that Tesla is a behemoth and they'll invest a lot more money. My prediction, my guess. So a PE of 80 would give us a stock price of $942 per share or a post 3-for-1 stock split of $314 per share. But look at the market cap. Even with a PE of 80, it's not hitting $1 trillion in market cap, which is absolutely crazy. It's nuts. All I'm saying, man, is that if Tesla is not trading in the 1 trillion market cap by Q3, it's just ridiculous. Absolutely ridiculous. In my opinion, guys, I think 80 PE is the max they can do in Q3 under the current circumstances. I mean, if the situation gets a whole lot better and, the recession, we bottom out and we start going back to a bullish movement, we can easily see a 90 PE, even 100 PE, which we can go to $1,200 per share. But keeping things a bit more conservative, 80 PE could be the case as the average. But if the market sentiment is terrible and everyone's still pessimistic and bearish, maybe we can see a PE of 70 even in the 800s. But it's clear, by Q3, we can see the stock price ranging between 800 to 1,000. On the average, $942 per share or 314 post-split. Most likely you'll see 314 post-split. Now, Q4 of Tesla deliveries is also going to be monstrous. I mean, at this point, if there's no more shutdowns, if there's no more big COVID spread in China and we don't see any interruptions, it's going to be a colossal Q4, a record-breaking Q4. I mean, it's going to be a record-breaking quarter. No doubt about that. I put here 445,000 vehicles delivered. At this time, Berlin should be ramped up very nicely and strongly. Same with Texas. Shanghai is being upgraded and Fairmount is being Fairmount. They're doing their thing. So 445,000 vehicles would give us a Q1 revenue of $25.7 billion in revenue. And net income, I put here 20% net income from the revenue, and that would give us almost $5.5 billion in net income. I got a feeling that Q4 is going to be closer to 6 billion. I don't know what it is, but we'll come back to this later. But 5.5 billion to be conservative. I mean, that's crazy. For the average sales in Q4, I put it at $56,000 only because inflation may slow down. Demand will maybe, well, no, demand is going to be sky high. There's no doubt about that. Maybe supply chain issues will slow down too. For those reasons, I decreased it by 1,000 to 56,000 bucks per vehicle on the average. Giving this a P of 80, we get a stock price of 1,173 bucks per share, or a post-split 3-for-1 of $391, giving it a market cap over $1.2 trillion. So that's crazy. That's nice. That's nice. Now let's say by then Q4 we're in a bullish market, everything's going up. Tesla is probably gonna be, people are gonna buy Tesla shares like crazy in a bullish movement. So we could potentially see a P go to 90, potentially probably in the hundreds, giving the stock price of 1,466 bucks per share, or when the stock split 3-for-1, $489. I mean, that's just crazy. Like, sheesh, that's insane. Market cap over $1.5 trillion. But that's only if we're in a bullish market. But if we're not in a bullish market, I mean, I just don't see why Tesla would trade lower than 80, to be honest. But for some reason, the stock market wants to do stock market stuff with the bearish and not, look at fundamentals. We can probably see a P of 70, probably even low as 65. But I don't see the market cap going below 1 trillion. I just don't see it by then, by Q4, which is, by the way, in 2023, January 21st of 2023 to April 20th of 2023. That's when we will know the full year of 2022, which is what it is here. I highly doubt we will see this. Most likely we'll see around in the 1100s, probably even reaching back to their all-time high just a few months ago at 1200 or 1253, whatever it was. As you guys can see here, total deliveries in 2022, 1.4, and that's only 1.4 if they can reach these two numbers in Q3 and Q4. Anything more than that, well, you already know what's gonna happen. I strongly believe they can hit 1.4. The least they can probably do is 1.39, 1.38, the lowest. I don't see them going lower than that. Even at that, the stock price shouldn't really matter as much. Maybe down a bit, 5% or so. So, to conclude, realistic Tesla stock price ranges could range from 1173 bucks per share to 1466 by year end, or by January 21st all the way to April 20th of 2023. Comment down below if you guys agree, man. But if you ask me, man, this Q2, man, it proved a lot of things. First off, again, I thought they're gonna go below $2 EPS, but my goodness, $2.27, like that. I mean, unbelievable. This is a shock to literally everyone, even Tesla bulls. It's just absolutely crazy what they did in Q2. This comes to show that Tesla is really strong, and even in a recession, they're gonna pull through strong. I know there's a lot of FUD out there about a recession, and in a recession, Tesla may not perform well. Well, in a week's time, we're gonna know if we're in a recession or not. Actually, if they declare a recession, we've been in a recession. Usually when the second negative GDP report comes out, a recession has started long before then. So if we're already in a recession, why is Tesla still selling every single vehicle they produce? Why are customers still ordering today and waiting a year for their vehicles? Because Tesla provides value and their vehicles are just next level. That's why. In fact, in my opinion, I think Tesla is probably one of few companies that if we go into a recession and it's bad, Tesla is one of those companies that can pull through heavily strong. Extremely strong, they will pull through. So there's no worries about that. If you guys are still not convinced or you just don't believe it, think about this. Back in 2007, 2008, 2009, Apple came out with the iPhone. Their price of the iPhone was 2 to 3 times, sometimes even 4 times the price of a normal phone. At that time, it was Nokia, Motorola, and other flip phones, and BlackBerry, remember BlackBerry? Well, where are they now? At that time, everyone was saying the same thing as they were saying today as for Tesla. Who's gonna buy a car, $60,000, $70,000, $100,000 car when they can get one for $20,000, $30,000? Well, back in the recession, back in 2008, 2009, they said the same thing about Apple. Who's gonna buy an $800 phone? Just get a Motorola for $200. It's different. There's value. It's technology. It's next level stuff. People want value for their money, not just stuff. And that's what Tesla's providing. Value and quality and love. That's what Tesla is doing. People don't want to compare Tesla vehicles to iPhones because they're two different classes. But at the end, they provide the same thing: value, quality, and love. And what I mean by love is that people who buy iPhones or even Teslas now, they love it. They just love it. They can't stop talking about it. They want to buy more of it. That's just what it is. That's how these companies are. And these companies always win. Competition is coming. Competition is coming. Oh my God. They've been saying that for the past 5-10 years. And yet, nothing really has happened. In fact, Tesla is the only company that's delivering more vehicles than the rest of them. I'm not talking about the other EVs as well. I'm talking about the current legacy companies. Even the other EVs at the moment, they're having a hard time. But some of them will pull through and will be successful. But that's for a different video. But now, since you witnessed Tesla crush Q2, which was one of the worst quarters for Tesla, and yet they still flipping crushed it, absolutely crazy. Check out how many shares you need to retire off of it, and while the price is still low, to grab them before they go to the moon. In 10 years time, obviously, because it's a long-term hold. Check it out, you won't be disappointed. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.